Hi everyone, today is Friday, November 13th, and welcome to week one of the Friday Market Insights video. My name is Sue Talbot and I'm a partner and portfolio manager here at Janus, and I also have Mike Thiessen with me. Mike is also a partner and the Director of Sustainable Investments at Janus. So let's get started. Mike, it was a pretty busy week in the markets last week, and starting off on Monday when Pfizer announced that it had developed a vaccine that was 90% effective against the coronavirus. So on Monday and Tuesday, we saw investors rotate out of the high growth tech names, what we've been calling COVID winners, and into the more value cyclical names. And so can you explain why investors would rotate out of growth and into value based on this positive vaccine news?
Yes, so investors are really betting on a post-COVID recovery. And in a post-COVID recovery, the cyclical companies are likely to come back. Companies like in the industrial space or materials or energy, travel as well, and hospitality. So investors are starting to look beyond what is going on right now and looking at 2021 or 2022 when there is mass immunizations possibly and a recovery.
Right, and the markets always do look ahead, 6 months ahead or so.
Exactly.
So let's talk about the sectors that were most beat up by the pandemic, and these are the hotels, the airlines, and the cruise ships, what we've been calling the COVID losers. They rallied back a bit this week, and I'm just wondering what our view is on these beat up names. Are we looking at them again and considering putting them back in the portfolios at this point?
No, we don't have them in the portfolios, and right now we're not considering them. They have bounced back a lot, but a lot of these companies are still under a lot of risk. Some of these companies need some sort of funding or bailout in order to just stay alive, or they need mass immunization really soon. And really, hospitality and travel is a very small portion of the overall market. It's not a big sector, but we will keep our eyes on it.
Right, so it sounds like we're not there yet.
No, not yet.
Okay, so we did make some changes this week in our portfolio. So maybe you can give us some specific examples of some of the names or sectors that we may have bought or sold during this last week.
Yeah. So this week we trimmed and sold some of our extreme COVID winners. So companies that have done very well in our portfolios, companies like Zoom, companies like Netflix or Shopify. So we've trimmed those, and then we've also started investing in cyclical sectors like industrials, materials, some financials, because we think that those cyclical areas will do well in more of a recovery type phase. And like we said before, the market is looking forward. So it's looking at what's going to happen in the recovery. And as we get closer to immunizations, I think that these areas of the market will continue to do well.
Okay, so let's just pivot a little bit and talk about the current COVID situation. So cases are surging in the US and Europe and even at home here in Canada. And governments are restricting some businesses, and some countries are even in lockdown at this point. So I'm just wondering, how concerning is all of this, for the economy and the markets?
So I think it is concerning in the short run. I think that it will create possibly more unemployment in the short run, but in the long run, markets are really seeing past the pandemic. Whereas what the economy is doing right now is focused on now. So for the markets, they're looking at what's going to happen when when mass immunizations are occurring, what parts of the market are going to do well at that point. But right now, yeah, with potential more lockdowns here or restrictions here and lockdowns in Europe, it's not looking good in the short run.
Yeah, the markets seem to be shrugging off this news because their markets are up today again, and it looks like we'll end up positive for the week.
Yeah, exactly.
So another concern is the stalled U.S. stimulus bill. The Trump administration came out yesterday and said that they were backing off on negotiating, and the markets did not like that. So how do you see this all playing out? How will this ultimately affect the markets?
So I think that we're likely to have more of a skinny stimulus bill. I don't think we're going to get the broad-based stimulus bill that the Democrats have been wanting for a long time, 2.4 trillion. we're probably not going to get the 500 billion that the Republicans have been really advocating for. That's more targeted. But I think the Republicans do have can really push further right now, given that there is possibilities of mass immunizations next year or the following year. They're going to basically say that we don't need a lot of stimulus since we're going to have immunizations shortly. But I think it's unlikely for something to happen this year. We could possibly have something early next year, especially if some of the Senate seats end up going to the Democrats in January. If they don't, then Biden's still going to continue to push it when he's officially the president early next year.
Yeah, it seems like there's some game playing happening with, the wait and see to see, who ultimately controls the Senate and. Okay, so I'm going to change topics now. You are the Director of Sustainable Investments at Genesis, so I feel like I should ask you a sustainability question. Yesterday, Shell Canada announced that they're going to give their customers the option of buying carbon offsets at the pump for 2 cents a liter, and you can do that through their Easy Pay app. And they're calling this program the Drive Carbon Neutral program. And Shell states that this is part of the transition while we continue to shift our energy mix as a company towards renewable power and renewable fuels. So my question is, do you see this as a continuing trend among oil and gas companies to shift towards renewables?
Yes, I think oil and gas companies are going to continue to make a shift towards renewables. They're going to continue to shift towards products that are more environmentally friendly, as environmentally friendly as you can really get with oil and gas products. But there is this large segment of consumers out there that are really passionate about the environment, wanting to fight climate change. And so a lot of other industries and sectors have really realized this, and they have products and services for that demographic. But with oil and gas, they're a bit slow to get there because of the core product that they're selling. And I think when it comes to renewable energy, I think that energy companies are going to continue moving in that direction. They've made small moves there, even though in their marketing material it might seem like they've made bigger moves. They've made some small moves so far, but I think they're going to continue to make more moves, especially as demand for renewables continues to increase and the cost of really supplying renewable energy is decreasing at a very rapid rate. It seems to just make business sense to enter into that industry.
Right, and the demand for oil and gas has really shrunk because of the pandemic as well.
Exactly.
So I think we'll end it here, Mike. Thanks for your thoughts, and thanks everybody for watching. And if you have any questions, please contact your portfolio manager. And if you're not yet a client, I believe there's a form on our website right below the link to this video that you can fill in. So thanks again, everybody. Have a great weekend, and we will see everybody back here next week.
Great. Thank you.
Thanks, Mike.